All right, welcome back everyone to another market recap. Today was the day after a bank holiday. Yesterday, for some reason, had a big move, and today was supposed to be bad price action. It was, but we did end up getting a big move back to the downside later on in the day. So I'm going to talk about what happened, how I honestly probably should not have entered this trade with the price action looking like this, because price action doesn't look super clean, but it's just a note for the future that when price action looks like that, maybe I shouldn't trade. You see Dodgy didn't take a trade because he assumed price action was going to be bad today, and looking back at it, could price action have been a little more clean? Yeah, it could have been. I mean, look at how choppy this is. But I did take a winning trade today. I'm going to explain my thought process. I'll explain why my bias for the day was actually incorrect, but I still got a winning trade, and how I can improve my bias for the future. So let's start from the very beginning. As well, I will be showing a trade from Amos, someone new today. Oh, I want to mention really quickly one more thing about Hydra. I know a while ago I was telling you guys in my videos, I'm not sure if Hydra enters on the candle body close through the breaker. Well, we just got confirmed here that Hydra actually, in fact, does enter on a candle body close through the breaker, and he pyramids more once it hits the fair value gap. So very interesting that that's a way that you can trade breakers. So very, very cool. You can trade once they are broken through. Anyway, we have 20 until midnight. No, midnight until, 20 until midnight. Let's mark that out. So here's Asia. And so you can see London came down and swept out Asia's lows. This led me to think that this was a London reversal, New York continuation daily profile. Now you can see this was actually a New York reversal daily profile, and we're going to talk about this and how I could have been a little bit more aware of what was going on. So we had this 15-minute mean threshold here. And so this was essentially the key level that I thought we hit in London. We hit London. We had a London reversal, pushed into this 15-minute key level, and also a 5-minute order block. You'll note that we pushed in. It was also this this final down candle, right? So like two different confluences, but this was like the key level. It seemed like. Maybe I needed a 1 hour key level. Maybe that's why. Something that I'll have to back test. But anyway, I assumed that 15-minute order block was the key level, but maybe it wasn't. Anyway, we then went on our way back up. We got this 15-minute change in state of delivery once this candle body closed above, which was also a 1 hour change in state of delivery. So we then could assume that Asia's highs would get ran, and Asia's highs did end up getting ran. At which point we swept out Asia's highs, and we actually decided to go take out London's lows. So this is the part that tripped me up, because I thought today would be New York continuation, because London clearly manipulated down and then New York distributed up. So I assumed that we were just going to continue, but we did not. And honestly, I think it's just because of it's just the liquidity thing. I think like when you have Asia right here, but then the other draws on liquidity are still kind of far away. So you can see how this one's far away and this one's far away. When Asia's close, but the rest are far, chances are the closest liquidity is now gonna be London, and it might reverse. So I think this was just like a unique kind of day. I don't think it was necessarily like terrible to have assumed that today would be London reversal and New York continuation. But in hindsight, it makes a lot of sense because these draws are kind of far away, and where did we want to go? We wanted to go fill this weekly fair value gap. So the low of the week was right here. So this was the low of the week. And so it's an unprinted weekly fair value gap because it was right here. But this used to be a weekly fair value gap. But then low of the week got broken, and so now we filled in this weekly fair value gap here. So that was where price was being drawn to, and you can see it filled it pretty well. So anyway, going back in the charts here, with this reaction off of this, with this weekly fair value gap, I am anticipating a move up higher possibly if we possibly hold this, because we're expecting this weekly fair value gap, this weekly order block. We're reacting off of bullish confluences. As long as this daily fair value gap doesn't push us back down, which we'll just have to see, I think this weekly fair value gap could support us and push us higher to possibly 3 months highs. But once again, if this daily fair value gap rejects us, then okay, we'll reevaluate when that happens. But yeah, previous all-time high seems to me like the possible drawn liquidity. And once again, we'll reevaluate if this daily fair value gap does want to get rejected. But anyway, moving into the charts, I'll talk about my trade. So this trade I took was a 30-second inverse fair value gap. The safe thing to do was to simply take all off at the end of this low resistance liquidity after we got this SMT and the sweep of these lows. Now, I actually did not do that. I only took partial here, and I intended to take a partial actually at this high, but I actually did not get my partial in, and it was really frustrating because I was gonna take profit like literally right here, but it did not really hit that. So that was honestly really frustrating. So only got my TP1 and not my TP2. I literally was gonna take profit here, so it's unfortunate, but it is what it is. And then I had TP3 up here, and in hindsight, I think this is just like, yeah, I thought the bias was going to continue bullish, but I think this is one of those trades where since once price action started to not be so smooth and to get a lot more choppy, I should have just said I'm just going to take a smaller trade because it's a lot more unclear now, with price action more choppy and conditions being not as clear, and this high being so much further away. The safer thing to do was to do a 1.3 to 1 risk reward trade. It just depends on the context. Like in this situation, it doesn't make as much sense for me to shoot for the stars here because, like, yeah, this is a drawn liquidity, right? The high of the week or whatever, and I thought we were gonna go there, but it just depends on the context. And I think this context with this 30, it was only a 30-second inverse, right? This 30-second inverse, all it's calling for is this low resistance liquidity to get ran. Past that, you really don't know. And with that in mind, I should have gone for the low-hanging fruit here and just gotten the 1.3 to 1 risk reward. But anyway, lesson learned, and we move on to the next. We move on to tomorrow. So we then dumped all the way down here. I don't know if we got any S&Ts or what, but we left the equal highs on that S&P. As well, something else I should have been more thoughtful about is we did have equal lows on the S&P, and I was like, I'll just ignore it. I shouldn't have ignored it. I think if there's equal lows on another indice, you should really give it more weight, because I just shrug it off. I said, equal lows on the other indice, okay, it doesn't matter. It mattered. Clearly it mattered, right? So I'm going to keep that into account in the future, and as well, we did end up dumping all the way down to this weekly fair value gap exactly, filled it perfectly, and yeah, that's about what happened today. So it seems to me like this could be, possibly this could be, actually, I'm not going to make predictions yet. We're just going to wait for more data to play out for the rest of the week, but yeah, this should be interesting. We'll see if this daily holds or if we continue higher. It's kind of unclear to me. So, one more trade. I forgot Amos. We got Amas's trade. So, Amos had the daily bias right here, clearly. He was like, it's hard, but there's no other option. Essentially, zooming into this trade here, looks like we have essentially He has it says order block and then fair value gap. So he entered on this order block and this fair value gap with stop loss above here, targeting these equal lows. Was this on the S&P or the NASDAQ? Yeah, and it also doesn't look like the 1 minute time frame. It looks like the 5 minute. So let's go on the 5 minute. See if we can find this trade. Honestly, I think he took the trade on the S&P. Yeah, he took the trade on the S&P. Anyway, I'll still review it. So he basically like, just to get better at this, right? But let's look at this again. We have this order block, and this order block overlaps with a fair value gap. So that's what he marked out, and this was the trade he took. So interesting trade, but yeah, there was high conviction here with these equal lows. So yeah, nice, man. There were also equal highs here too, so interesting. But like I kind of get his concept here. So anyway, that about covers it. If you guys have any questions, let me know in the comments below, and I will see you guys in the next one. Bye.